Good evening, everyone. Welcome to Bazaar pe Charcha with the TraderSmith India. So, still people are joining in, and we'll wait for one more minute and we'll start this session. So, by then, I will be reading the disclaimer, standard disclaimer from our side. So, registration granted by SEBI, membership of BASL, and certification from NASM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related document carefully before investing. So this is our company name, and address, and SEBI registration number. And in case of any complaints, you can contact to this number. And we'll coming to the directly coming to the Nifty part. And if you see the chart over the period of time, how market has been placed, and if you see Nifty 50 as well as Sensex is still in the rally attempt, and after it made a new low at around 23,000 kind of 200 kind of level, so 200 300 kind of level. So there was a very good bounce back. However, Nifty is awaited its still follow through day. So right now it's still in a rally attempt, and mid cap and as well as mid cap is in a rally attempt mode, though it's almost near to its all-time high. So once it crosses that high, we'll make it to rally. And small cap as well, it's still in the under pressure zone, and it's almost near to that all-time high level. So let's see. And Realities and banking index is and IT especially, it's outperforming. From if you see from the reality space, it's almost from the last 1 month, it's gained around 12% on the hope of interest rate cut. So, but however, this RBI monetary policy just they have cutted the CRR by 50 basis points, and IT stocks, it's gained around 7% from last 1 month. So coming to the metal also, it's trading near to that resistance zone, and it gained well around 4%. And still, is majority of the index, especially FMCG, is lagging behind. It's underperforming compared to the all the major sectoral indices. It's so from last almost, if you see from last 3 months, FMCG is almost lost around 14%. So let's see in detail each by each sectoral indices. So, and if you come to the Nifty 50 part, so before we hop on to the this Nifty 50, so yesterday US inflation data has come, which is came nearly almost in line with the expectations. And because of that reason, so there might be a interest rate cut from Federal Reserve in the next week. The policy is going to be happening in the next week, so there might be a rate cut from Federal Reserve. And also today there is key data which is still due in from US front, but however that data not so much uh, impact. It will impact the rate cut scenario. And coming to the Indian market today, inflation rate, which is now just now came around 4 o'clock or 4:30 kind of time, around 10 or 5, 10, 20, 20 minutes back. So India's inflation rate also, it's around in line with expectation, currently at 5.48, which month on month, and last month it was around 6.21. So it was estimated it will be around 5.5%. And because of food inflation raised by around 9 to 10%, that is a major concern for now for the RBI as well as central government. So, however, it's in line with the expectations. So let's see how it reacts to market in tomorrow. So coming to the Nifty 50 technical side, so almost it's trading in the after it nearly touched that low around 23,250 kind of level. So this is a weekly chart. So almost it touched that 50-week moving average, and after that it gave a bounce. And if you see our last Bazaar pe Charcha, It's almost near to that breakout level, near to that 23,600 or 24,300, 400 kind of level. So it gave a very good breakout with the bullish candle. And after that breakout, so there was a uh, hurdle around its 100 DMA. And if you see the chart closely, so there was a very good hurdle, which is its index is facing around that 100 DMA as a resistance, as well as if you draw Fibonacci line from the recent low from to the high, which the correction was made. So that comes 50% of that retracement level also placed around that level, that is 24,700 kind of level. So after that reaching that level, its index is facing some sort of uh, resistance around that area. And if you see from last 4 5 days, it's consistently making doji candles with the tight range formation. And today there was a slight from the sideways range, it's a slight breakdown, and currently hovering around its 50 DMA as well as 100 DMA. So right now on the technical side, what we can take from this scenario is this area, that is 24,700 is a key resistance area. Once it crosses and holds about that 24,700, then we might see the next level will be 24,850 followed by 25,000 kind of level in the Nifty 50. So once it crosses that to 25,000 to 25,000, 25,200 kind of level, then we might see the next leg of resistance around 25,500, where this gap down area which was happened. So that will be the next leg of resistance for Nifty 50. But however, right now index has to hold that it has to give a breakout, as well as it has to hold that 700 kind of level. Then only we can say we can say the next leg will be 25,000 kind of level. On the downside, it's currently hovering around its 50 DMA as well as 100 DMA. So first leg of minor support is placed around 24,400, followed by this breakout area. So if you see on the daily chart, this index has given a small downward sloping trend line, as well as on the 9th December, 5th December, it has given a nice retest to that breakout level, and now current is trading at sideways. So what we can take call is 24,400 and the downward sloping trend line that is comes around 24,200. Also, it's a 21 DMA, which is placed around that 150 kind of level. So 24,200, 24,150 is a range for Nifty 50 for the key support area. So until or unless it's trading below this 100 DMA, this will be the key area for Nifty 50. Once it breaks below this 21 DMA, then we might see 200 DMA, that is 23,800 kind of level for Nifty 50. So on the momentum side, so momentum is slightly deteriorated. However, from the last 4 5 days consolidation range, that is the reason it's slightly deteriorated. So anything can happen. So once it breaks out that 700 level, so we might see a bullish trend. So better to wait for the cue from the Nifty 50, where once it crosses that 700 level. So next sector from my side is Bank Nifty. So Bank Nifty, from the weekly time frame perspective, it's trending positive, and it's trading, I guess, almost trading above its key moving average. So trend is bullish, and also it's major stocks, HDFC, ICICI Banks is trading at near to all-time high level. So it's kind of it's given a small breakout from the upward sloping trend line on 4th December. So from the consolidation range. So once this bullish trend is continued, it will be continued until it's trading above this breakout level, that is around 52,700 level. So if once it breaks this level, then we might see a trend change in scenario, where once again it might move into this consolidation range. But right now it's still trading positive. Once it crosses and holds that holds above 53,900, which there was a gap down area which was happened over here. So that is a level key resistance level for as of now for Bank Nifty. So that is 53,600, 700 level. So once it crosses and holds that level, then we might see fresh all-time high that is around 54,400, 500 level in Bank Nifty. So momentum, it's still trending positive, slight because of today's data, it's slightly trending downside. But however, key support is placed around 52,600 level. So this is regarding Bank Nifty, and the next sector is the Nifty Pharma. So Nifty Pharma, it's trending in the sideways range. So it has been outperformed from last almost 1 year. And after that, it's making a small correction and it's making consolidation range. So it's currently hovering around its 50 DMA. And if you see closely observe this red color line is 50 DMA. So it's facing a strong resistance around 50 DMA and coming back from making a lower high, lower low price structure. So once it crosses that 50 DMA, that is around 52,600, the trend will change and we might see the near the past all-time high that is around 23,700 that we might see in the coming days. But failure to hold and closing below this 50 DMA. So we might see continue to consolidate. The recent swing low, which was made around 21,500, that will be the key support area for pharma sector. So until then, so in the index likely to continue this trend in this particular range itself. So better to watch out for this kind of this level for Nifty Pharma. And I think I have covered three sectors, and my colleague Rahi will take the few sectors from major sectors.
Okay, thank you, Yatisha. So I will be talking about Nifty IT and Nifty Auto, Nifty FMCG, and Nifty Energy. So this is the daily chart of Nifty IT. So as we can see at the chart, like the index is trending higher, and as of now, at this point of time, there is no such I can say any negativity, and the index is comfortably trading above its all key moving averages. There has been some sort of this that correction or consolidation that has taken place, and that was almost 2 to 3 months back. So I'll be talking about just 1 month or just last 2 to 3 weeks, the price action that has taken place in this particular index. So overall, the technical parameters has improved, and the price structure especially has improved in terms of volume as well. If you look at the volume part, and index is trading in the bullish zone with no sign of weakness. So if this bullish momentum continues, then in upcoming days index might move towards 55,000 800 to 56,500 in upcoming days. And if there is any sideways trend happens, or if any negativity we might see, then obviously we will update in the next Bazaar Pe Charcha. But as of now, there is no weakness in this particular index. So it was about Nifty IT. Now I'll be talking about Nifty Auto. So Nifty Auto, from the past 3 to 4 weeks, index is trading with negative bias only, and we can say that there has been some improvement, because if you look at the correction phase that has taken place from 27 September onwards, it was slight it was a correction of around 10 to 15%, I guess. And after that, index is trading in the sideways. So as of now, if you look at the chart, index is hovering between its 21 DMA and its 200 DMA. So as of now, we can see like 21 DMA might act as a support, and 200 DMA is actually acting as a resistance. So once this resistance is surpassed and index gradually move towards its 50 DMA. So if you look at its 50 DMA and its 100 DMA and its to 200 DMA as well. It is in the range of just 4 to 5% only, because 50 DMA is just 2.2%, and if you look at the chart, 200 DMA is just half percent away from this, and 100 DMA is just 4.9%. So almost index, if the index reclaims just 5 to 6%, then obviously the sentiment in this particular space will change, and we can initiate new call as well. But as of now, we have to monitor the price action and how it is behaving, and whether it is taking support of its 21 DMA or not, whether the index is reclaiming towards its 100 DMA or not. We need to wait and watch, and then we can take our action accordingly. So it was about Nifty Auto. The next index is Nifty FMCG. So Nifty FMCG is also like similar case, because from the same date also, I can say in the same range, 27th of September, the correction has taken place and the index has fallen this much. But from this recent low that has taken place here around 55,493, the index has shown some recovery, and index is trying to move upside as well. But again, this black line, which is 100 DMA, sorry, which is 200 DMA, it is again acting as a resistance, and it has retested its 200 DMA, but it was not able to hold it, and on the very same day it has breached it, and after that the index has not able to reclaim it once again. So let's see whether it is reclaiming it or not. But as of now, overall sentiment in FMCG is not that good. It is trading with negative bias only, and it is trading in the bearish mode, we can say. So we need to wait and watch for the improvement in terms of price action in Nifty FMCG. The next index is Nifty Energy. So Nifty Energy is also chart, we can say like it is similar, because these three charts, auto, FMCG and energy, is similar to each other, because the correction happens with the same date, we can say almost 1 or 2 days here and there, and then improvement has also taken place in the same day format, just 1 or 2 days here and there, we can say. So again, after this 30th of September, there has been a correction started, and then we can see like from 22nd November onwards, there has been improvement in the chart, and the technicals actually has got improved. After hitting its recent low at 35,440, the index has actually started witnessing buying interest, and it is gradually trying to move towards upside. Now the thing is, this we can see the line, which is pink line that we can see, it is actually 21 DMA. So 21 DMA is actually acting as a support, but we need to wait and watch whether this support is taking place or whether support is breached. And if the support is breached, then again we have to take the sideline. We should not enter aggressively unless and until the index is at least it has to reclaim its 50 DMA. And for the better, I can say, for the bullish trend to emerge, the index has to reclaim at least 8 to 9%, at least this line, this 100 DMA. So once that is happening, this then obviously the overall sentiment and price structure also will get improved, and then we can take our call. So this was from my side for these four sectors. I think one or two more sector is there to discuss.
Okay. Thank you, Rai.
Yeah.
So hopefully, yeah. So this is the next sector is from Nifty Metal, and this is a weekly chart of Nifty Metal. And if you see here, it's currently consolidating in the range of 8,700 to 10,200 level. So it's consolidating in this particular range itself from last almost, if you see from last 6 to 8 months. So it's almost it's consolidating in the range. And in the recently, if you go to the daily chart, so that is a key 8,700, where previous low which was made around that level. So it's a crucial support level for Nifty Metal. So it's once it comes down, came down, it's made a huge uptrend. But right now it has given a downward sloping trend line from the recent swing lower high price structure. But right now it's trading near to that resistance level. And if you draw a Fibonacci level from the higher, from the recent correction, so it's almost 50% retracement of the overall fall which has happened in the last correction. So right now it's facing 9,400, 9,500 is a key level to watch. So it has given a very good breakout and continuously trading above this breakout level. So until end it's holding above this breakout level, it's well and good. So once it might head towards 9,900 kind of level, and followed by the new all-time high which was made around 10,400 level. So on the downside, the key level will be the breakout level, as well as its 100 DMA, which is a green line, where it is placed around 9,000, sorry, 21 DMA, that is 9,100 level. So that is a key support level for Nifty Metal. So once it breaks below this 9,100, then we might see the crucial level of 8,700, 800 level in the Nifty Metal. So trend is positive. So currently trading at resistance level around 9,500, 600. So once it crosses that level, then we might see 9,900, 10,000 level in the coming days. The last sector, uh, Nifty Realty. So because of rate cut hope, Nifty Realty has been outperformed, and also if you see from last 3-4 weeks, it's almost gained around 78%, and it has given a downward sloping trend line inside that consolidation range. And right now it's trading near to that key resistance area of 11,100. So if you come down to the daily chart, it's trading above its key moving average. However, 21 DMA is still trading below this 100 DMA. So the key level will be upside or this downward this trend line. So once it crosses that 11,100 or 110 kind of level, then we might see fresh upside in this sector. But right now it's trending in this consolidation range itself. So key support will be that will be around 50 DMA. So that is around 1,030. So once it closes below this 1,030, then we might see this next leg of support will be 950 kind of level. On the upside, once it breaks out that 1,110 kind of level, then we might see the level of, if you draw a recent correction, and we might see the 0.618 retracement will be, that will be around 1,250 to 1,260 kind of level for Nifty Realty. So in the upcoming, I think in the next coming rate cut scenario, I think it will be done in the month of January or February. So that time we might see some more, if rate cut happens, then reality sector might be outperforming in the coming days. So watch out for this level for Nifty Realty. And I think we are open for stock related query. And, can you open the chat box?
I think it is already open.
Okay, I think Cross Limited asked Auto. I'll take up Cross, the recent IPO which was came, and if you see after IPO, it has there is a very good nice correction from the IPO based pattern, and right now it's making a large cup based pattern over here. But however, pivot level it was not reached, and before that only there was a slight correction. And let's see, once it crosses that IPO level of 258, then we might see any fresh upside in this particular stock. But right now, until it's holding above this 260, it's better to avoid. So it might stock might continue to trade in the sideways range, or they might be making new base. It might be a double bottom base. So until and unless either if you are bought somewhere in the base low, or if someone bought in this particular base low, then one can book a partial profit and continue to ride the remaining position once it crosses that 260 kind of level. Ask cut. So as Kato, it has given a advanced breakout, and if you draw a downward sloping trend line from the base formation, it has given a very good breakout in around December 4th. So it has given a very good breakout. After that breakout, it has given a once again pivot breakout. So it's trading at the positive level. So those are already holding from the pivot level or breakout level continue to hold. At current juncture, it has given a pivot level breakout also. So stop loss will be little deep. So if you draw currently around 50 DM is around 11%. So those who are willing to take the risk of 11%, 12%, one can go with this particular stock. The stock is looking strong. It's bullish, and fundamentally also it's a very good stock, and fund holding also rising. So strong, and also if you see RS blue dot line, so very good character are is very good, and those are want to take a position. One can either go with the breakout level as a stop loss or 50 DMA as a stop loss for this particular stock. TCS and Asian Paints. Okay. So TCS here, IT stocks are performing very well, and it has made a advance by setup where it has given a very good breakout from this downward sloping trend line, and also there was a retest from that breakout level, and it is trading in the pivot level right now. So those are already holding from the lower level. One can continue to hold and look for this particular level where the recent high was made, that is around 4,600. So once it reaches there, either one can book partial profit or continue to hold this particular stock. The upcoming Trump's era will be majorly may boost the IT sectors in the uh, coming in the coming years. But those are holding for can wait for long term. Those are wanting to hold for long position, then continue to hold. Those who are willing to take a swing position kind of level, then one can look for partial profit around this level and continue to hold this particular stock for remaining stock for further upside. Next one is Asian Paint. So Asian Paint, I think recently after that earnings, its stock has hammered, and majority of the brokers also given a thumbs down for this particular stock. Really mainly because the Asian Paints are losing the market share, and because of market share lose taken over by Grasim as well as Indigo Paints, so major as well as Berger Paints. So because of that reason, you can see the underperformance from the Asian Paint. So it's better to exit from this particular stock, but not to take fresh entry at current juncture. It's kind of negative news coming in for Asian Paints from all the sides. So better to wait for the level once it consolidates, and once again it forms a base. Then one can look and one can enter this particular stock. But right now, one can avoid.
Okay, Yatisha, I'm taking some of the stocks, okay?
Okay.
Okay, so I will start from KPI Green. So the stock is actually still in the correction phase, we can say, but there has been some improvement after hitting its recent low, and from 22nd of November there has been some improvement, but still, I think if you are looking to buy or if you are planning to enter fresh here, then at least you need to wait for at least the stock to move around 875 approx. At least this 200-day may it has to be reclaimed. And as of now, I will not suggest you to buy the stock. It is trading with negative bias only, and it is trading in the sideways from the past 7 to 8 days. Now BSC is actually trending in the bullish zone, and there is no sign of weakness in the stock. The stock has done really well, and it has also gained 12% from the pivot level in just 5 days. That is also good, and uh, uh, if you look at its bias demand, price strength, APS strength, everything is great in this. So if you are holding their stock, then you can remain invested in that. HAL. So HAL is just is gradually it is trying to move towards upside, and if this buying interest remain there in the stock, then it might give breakout as well. So if you look at the William O'Neill breakout, this consolidation based breakout, we if as you can see that these dotted parallel lines here up and down here, so it is 18% to the pivot level, so there will be breakout. But if you look at the chart as of now, and if you are thinking to take the call now, so I think you can enter, but you have to manage your stop loss. At least like 200 DMA is placed around like 6 to 7% as of now. So that might act as your stop loss. But if you are watching, then it is actually good to have in the watch list. HL. And Natco Pharma. So Natco Pharma is also trading with positive bias only, and it is trading up its all key moving average. And there has been improvement in the price action in the stocks, and overall sentiment has actually improved. The stock has actually gained around 8 to 9%, I guess, from the past 2 to 3 weeks, and it is doing well. So as of now, if you want to invest in the stock, then you can, but you have to manage your stop loss as well. But if you look at the William O'Neill breakout perspective, then obviously you need to wait for another 10%, because it is just 10% to the pivot level to be breakout. Then the next stock is CDSL. So CDSL has already broken out here, and the stock broke out with very good consolidation, and it is a stage 2. So if you look at this parallel up and down, this parallel dotted lines, from here the stock has given the breakout, and after this breakout the stock has gained around 17% in 22 days. So it is if you are holding the stock, then you can remain invested in the stock. There is no sign of weakness so far, and if you look at the volume part here, volume is also good, and there has been a very nice accumulations. And if we talk about the APS strength, even if you look at its bias demand, that is also A plus. APS strength is 95, so it is good actually. The next one is IDFC First Bank. So IDFC First Bank is still trading with negative bias. The stock is consolidating from a long time. So we don't know when it will get recovered. So as of now, I will not suggest you to in the stock which is actually volatile, and it is trading in the volatile zone as well. So yeah. So the next one, Itisha. Okay, I will check myself. Nazara. Nazara Technology. So Nazara Technology stock is doing good, and it is trading up its all key moving averages. But from the past 4 days, there has been some we can say that price action has deteriorated, but it is not that weak. The stock is doing good actually. So if you have already taken your position and you are already entered in that stock, then you can remain invested in Nazara.
Okay, let me take few queries, sir.
Yeah, sure.
Okay, so first one is API Graph. So strong fundamental is a strong stock. It's currently trading in the consolidation base. And if you draw a inside base candle, uh, if you draw annotated candle from the inside base, it has given I think it has given breakout on a closing basis. So after that closing basis, currently trading at sideways range. So better to wait for those who are holding from the lower level. One can wait for this swing low as one can keep a stop loss as a swing low, or one can draw a trend of this recent swing lows as a stop loss and continue to ride this rally. And the first leg of resistance will be around this level, that is around 2,300. So that will be the first leg of resistance for this particular stock. So once it breaks out this level, then we might see fresh upside breakout. But right now it's trading in the consolidation range, and also on the if you notice the volume, buy volume is not so great. So better to be careful. which is coming, is gaining at current moment. But right now it's trading gaining at a very lower volume. So one can better to watch out for this stocks. So uh, in the coming days. So next one is Axis Bank. So right now it's trading at a consolidation range. It's underperforming in the banking space area. So if you draw a trend line from the near recent highs, so that if you draw a closing basis breakout, so that is going to be happen only once it crosses and holds above this breakout level, that is will be around 1220 kind of level. So only once one can take a position once it crosses and holds that level. So until or unless it's trading in the consolidation range. And if I draw a major support area, so that is this will be the major support area for an Axis Bank. So it's currently consolidating around this level. So once it breaks below this 11,100, then we might see fresh downside window likely to open, and that might coming down to 1,020 kind of level for Axis Bank. Next one is data pattern. So here it is defense stock. It is trading. If you see a pattern. So once it breaks out from in the month of July, it has given a failed breakout, and stock has been closed below its 200 DMA. Right now, it's facing a strong resistance at 200 DMA. So here, if we draw an upward sloping trend line, so index is facing a strong resistance around its trend line as well as 100 DMA. So 100 DMA as well as 200 DMA, which is almost near. So once it breaks out this level, then we might see next leg of resistance that will be around 3,000 level, followed by 3,400 kind of level. So, but more looking at the current moment, it has to, those who are willing to take a risk, the stop loss will be much deeper because the swing low will be much deeper in this particular stock. So better to avoid the stock, better to consolidate little more further in this particular range, and take position accordingly according to your stop loss. Next one is Motilal Oswal. So strong stock, strong, fundamentally strong stock, and it has given a consolidation base for stage 4 pattern breakout. So it's currently hovering around that level. It has already given a breakout and outperforming among all the stocks. So strong stock, those who are willing to take the risk, one can take a risk of 50 DMA, as well as one can take a base low as a stop loss for this particular stock. And looking into the current sector, and the whenever the buy volume is coming, it's coming above average. So it's very good. So those who are willing to take a risk of around uh, if it 11%, 12%, one can look for this particular stock. Next one is Angel One, similar uh, industry or brokerage firm. Like it's made a cup based pattern, and it has given a first leg of breakout in this particular range. But however, that breakout has been failed. Once again, the stock moved came out of that breakout level, and now it's formed a cup with handle base. So once it has given a breakout, the volume is also, it's on the volume is much lower. It's better to wait. Once it if it comes back towards this 3,050, 3,080, then that will be the very good buy at but at current juncture, better to avoid. So the next leg of resistance, that will be around 3,800 level for Angel One. Next one is DP Abushan. So its liquidity is very low in this particular stock. Better to watch out for this 50 DMA, followed by 1,800 kind of level for this particular stock. One can avoid this stock right now. Better to wait for this breakout level to happen at a higher level. Next one is NetWeb. It has given a multiple breakout levels, but however, it's coming back towards that base. The strong stock, fundamentally strong stock. The people are accumulating from the at the higher level whenever the breakout is happening, but the stock is not performing. So better to, it's consolidating. So it's giving not going up nor going down. So better to wait for this particular stock. Either one can go with the 100 DMA as a stop loss or a swing low in this particular stock. Or those who are willing to take more risk, then one can draw a trend line which comes near to that 100 DMA area. That will be the key support for this particular stock. So once it breaks below this, one can exit partially. And once again, if it crosses below this level, then one can completely exit from this particular stock. Next one is GRSC. So it's making after that underperformance from the last 2 to 3 months, it's coming back. It's coming from back from the basis. It's making now it's making higher high, higher low price structure. And if you draw a downward sloping trend line from connecting the highs of recent highs, so it has already given a breakout around this 1620 kind of area. So right now it's facing some resistance around 100 DM. So once it as well as if you see the price structure around this level, so that will be the key resistance area for this particular stock. So once it crosses that 2000 level, so then we might see 2400 level in the coming days. So strong stop, but right now the stop loss will be little deep, and if you draw, it's almost 200 DMA is almost 15%, and 50 DMA is almost 8 to 9%. So those who are willing to take a risk, one can look for this particular stock. Next one is Dixon. So disclaimer, MarketSmith India is holding this stock, and it's performing 33% from the buy price. So it's slowly and steadily is gaining, and will continue to ride this stock and until it's showing any kind of major weakness. So strong stock. Wait for MarketSmith India for the further updates. Rahi, can you take a few queries?
Yes, Yatisha. So Vedanta shares. Okay. So this was the stock which was asked by someone. So a stock is doing good actually, and the stock is about to have the breakout as well. It is just 0%. I think some 1 or 2 rupees has got escaped, I guess. So I think we need to wait for one more day. Let's see how price action is behaving, because if you look at the volume part, it is actually good. Accumulation is good actually, and overall the stock is trading up its all key moving average. There is a improvement in price structure as well. So if you are already entered in the stock, then you can remain invested. And if you're looking to buy it as a new call, then I think you need to wait for one more day, just to for the confirmation, and also that breakout will take place. If it's taking the breakout, then obviously you can enter in the stock. The next one is State Bank of India. So it is actually trading in the sideways from the past 5 to 6 days, and still it is just 6% away from the pivot level. So if you are looking, or if you're eyeing on the stock, then I think you need to wait and watch. At least let this 6% it needs to achieve, and then you can enter in the stock when there is a breakout it is taking place. Or if you have already entered here somewhere when the stock has declared its 200 EMA, let's say for as an example, then you can even invested in the stock. There is no weakness as of now. But the main thing is, from the past 5 to 6 days, it is trading in the sideways. But if it is not that volatile, it is not falling so the fall is not so intense. So I think you can wait if you have already entered the stock. The next one is intellect design. So it was trading it was trading with negative bias, but after hitting its recent low at 693 here, the stock has shown great recovery, we can say. And if you look at the price action, it is actually good here. It has taken around 6.5% or almost 6.5% here. Also, it has gained around 7.5%. So almost the stock has gained around 15 to 16% in this 5 to 6 days of trading session. And if you look at the volume spike here, then also it is like above average volume. So that is good actually. So if you have already taken the stock, or if you have already bought the stock at the low here or somewhere here when this 21 DMA was declaimed from the lower side, then you can remain invested in that stock. But if you're looking for the fresh call, I think just to wait for another, like this black line, I can say, like almost it is just how much 11% away. So you need to wait for another 11% for the price confirmation. Or if you want to take your aggressive call, you can take, but you need to manage your risk reward ratio as well in the same manner. I think you have already taken this stock, NetWeb. Yeah. So the next one is Laura's Lab. So Laura's Lab has also given the breakout, and the breakout has taken place here on 25th of November, and the breakout was consolidation based breakout. The stock is doing good. It is trading up its all key moving averages. And the main concern in this particular stock is, like, from the past 4 days, it is trading in sideways, or we can say in a very tight range. uh, let's see whether it is trying to retest its 21 DMA or not. It is just 4% away. So if you are holding the stock, then you can remain invested in that. And if there is a fall in this stock, then you can adjust your I think your risk reward ratio. And if you have taken this stock after this breakout level, then I think you need to watch for 21 DMA. If that is also breached, and if it is breaching with above average volume, then I think you need to take your call accordingly. The next one is UPL. So UPL is trading sideways from past 1 week, but from past 4 to 5 weeks, if you look at the chart, especially from 13th of November, after that there has been some improvement in the stock. Price action has got improved. A stock has started moving toward upside with positive bias, and if you look at the volume part here, then it is above average volume also. But the main thing is, it is just 4% away from the pivot level. So I think if you want to enter in this stock, better you wait for another some days, or I can say 2 to 3 days, when this 4% level is achieved, or this breakout is taking place. Once the stock is taking the breakout level, then you can enter in this particular stock.
Okay, thank you, Rahi. So let me take few queries. So first one is C8. So recently, it has given a very good breakout. If you see the pivot level breakout, which has happened nearly three on last Monday. So after that breakout, it has tested that coming back towards its pivot level. So still it's strong. Today also it has almost tried to make an attempt to coming back to from that pivot level, but however closed on the negative note, but on the downside, lower side of the candle. So better to those are willing to take the risk. One can this stock is little bit volatile, so one can look for this little bit deep. One can look for deep stop loss, and closing basis stop loss can also be used for this particular stock. Uh, so I think something wrong. Okay, I will take the next query. I'll come back towards the sixth query. And tube investments better to avoid. So once it closed below this 200 DMA, as well as if you draw a horizontal trend line, so it has been breached. So sentiment is negative right now. So better to avoid this particular stock. Next one is Supreme Industries. So here also it's once it breaks below this 200 DMA, so it's coming back towards this 200 DMA and consolidating in this particular range. So one can look for this particular level once it crosses that 800 level. So also 200 DMA, which is almost placed near to that 810 kind of level. So once it crosses and holds that level, then one can see 870, 880 kind of level for this particular stock. So until then, better to avoid. The stock is slightly negative. Next one is CES. So stock has given a advanced breakout. If you draw a trend line from the downward sloping trend line, so it has given a very good breakout from the downward sloping trend line. Right now, it's at making an attempt to retest that level. So once it if retest and bounces from the level, which is a very good sign, then one can continue to hold this particular stock uh, for the upside, further upside. But if it fails to hold that breakout level, and then again it will coming back towards its swing low, so that will be around uh 109, 110 kind of level. So watch out for this level. Those are already holding at the breakout level, then continue to hold with the stop loss with around 181 kind of level. Yes. Next one is ACE. So here also stock is moving in the sideways range. So the range, the key resistance area for this particular stock as of now is 4,000, 1,470 kind of level. So once it crosses and holds that level, then we might see a fresh upside towards its pivot level, that is around 1,670 kind of level. So until then, better to wait and watch. Once it crosses and holds that level, breakout level, then you can enter. With the stop loss below, it's one can either go with the swing low, which is slightly deeper, but or else you can go with the 200 DMA or 50 DMA as a stop loss in this particular stock. Next one is Symphony. So it's making a lower high, lower low price structure. So better to avoid. So it's once it fails to hold this level, then we might see 200 level likely to touch around in the coming days. So better to avoid this particular stock. Next one is uh, Shriram Piston. So Shriram Piston, it's making an attempt to break out. It's currently trading in the sideways range. So one can look for this 2,360, the pivot level breakout for this, but in the coming days, level to watch out. With the stop loss below, it's 50 DMA or swing low, whichever is convenient for you as per your trading style. So strong stock, very one can look for this 2,350 kind of level for the for on the upside. Now is Aegis Logistic. Recently, it has given a very good breakout from the double bottom base, but however, the breakout has been not sustained, and it has given a downside breakdown also. So right now, better to avoid this stop. Those are already bought near to that breakout level. One can exit completely from this stock. The stock likely to coming back towards a swing low, that is around 660 kind of level. So 200 DMA is also placed around 700 level. So better to avoid this stock right now. So once again, if it comes back towards this 860, 870, so one can look for this particular stock. But until then, can avoid. Next one is Clean Science. Clean Science, I think from last 2 days, there has been sharp up move from the tight base consolidation. So it's kind of 1 2 days kind of level for this particular stock. So better to avoid right now. So better to let it consolidate with the volatility once it pulls down. So once again, it making a base. So one can look for this particular stock. So if you see the larger time frame chart, it's still in the large consolidation range itself. So better to avoid this stock once it closes above this 1,600, only one can look for this particular stock. Until then, one can avoid uh, in the coming days. I think.
Okay, I will take some of the queries, Atisha.
Okay.
Please stop sharing your screen. Okay, someone is asking about Nalco. So Nalco is, if you look at the price structure, it was actually doing good. After this breakout that has taken place and stock has done really well. But from the past, we can say like 2 to 3 weeks, stock was trading in the sideways, and आज का जो trading session हुआ इसमें stock has fallen about 7.5%. The major reason being is decline in the aluminum price first of all, and the second one is the news that came that withdrawal of guidelines by Australian miners for its aluminium smelter in Mozambique. So that was also the reason, because of that protest that has taken place, the stock has actually impacted because of that, and there has fall in that. But if you are holding the stocks, then and if you are still not out of the stocks, I think you need to wait for another day. And if price action is still volatile and it is falling next day, then obviously you can take your call. Or whether it is a one day news based story, then if a stock is bouncing back from that level, then obviously you can hold. So everything is in your hand, and just you need to manage your risk reward ratio. The second one is Daulat Algotech. So the Daulat, sorry. So Daulat Algotech is trading in the sideways with negative bias, though the stock has got support near its 200 DMA, and this 200 DMA has been retested in the past 1.5 month, almost multiple times. We can see it here. So a stock is actually hovering between its 200 DMA and 100 DMA. So once the stock is reclaiming its 100 DMA, then obviously we can you can take your call or you can enter in the stock. But if that is and if you have already entered in the stock, you have already holding the stock, and if the stock is breached its 100 DMA, or at least this 120.60, so 119 might be your SL. So you if it is striking below that, you can exit from the stock at that price. All depends upon you. And the next one is eMudra. So eMudra, I think we are already holding in our TraderSmith portfolio. So stock is doing good, and we have already added. So let's see, and we will be updating you in terms of email and with messages. So please stay connected with us for that matter. Yatisha,
I
I think
think
there are some
we
of the
have,
stocks left, not much.
yeah, we have few queries. Quickly, I will take the queries.
Okay.
Okay. Uh, Let me share my screen. So first one is Himmat Singh Kasid. So stock is almost give a power to pivot level. It's from the breakout level which has happened around 170 level. So after that it made it almost 20%. It's trading 20-30% from the pivot level. So those are already holding from the pivot level. One can either book partial profit and continue to or hold the remaining position until the stock is showing any kind of weakness. So the stock likely to move head towards to the recent all-time high, which is made around 280 290 kind of level. So one can look for this particular stock in the further upside. Next one is ITA, sorry, IRDA. So IRDA, even this particular stock, all the PSU stocks, defense stocks have been bounced back from in the last 1 week. So once it there is a breakout. The stock is hovering around its 100 DMA. So once it crosses and holds that 200 DMA, then we might see 260 kind of level in the coming days for IRDA. But until then, stock is likely to trade in this particular range in between its 200 DMA as well as 100 DMA. Next one is ITA, sorry, IRFC. IRFC is also its similar chart pattern where facing resistance around its 100 DMA. So once it crosses and holds that level, it's likely to next leg of resistance will be 170, followed by 190, 200 level for the IRFC. But looking at the current juncture, stock has given a breakout on near to the last week. So it's still above that pivot level. So once it comes back towards slightly down around 150 kind of level, then that will be a very good buy point. Uh, where stop loss is also which is favorable, but the current junction better to avoid this particular stock. Next one is ITI, and ITI because of I think there was some news which I forgot, but because of that reason, stock has been really performing well from last. If you see, there was a very good sharp bounce back, and after that, very good. There was a very good breakout from uh, sideways pattern, and stock is right now its pivot level breakout is which is happening. but better to avoid this stock as it's still the stop loss is little bit deeper. It's not little bit deeper, it's much deeper. So better to avoid this particular stock at the current junction, though it's trading at the consolidation pivot level. So better to avoid this particular stock. Those are already holding from the lower level. One can continue to hold this particular stock. I think IEX is missing. So IEX also it's bounced back sharply from the lower level. Better to avoid this particular stock. So let it consolidate furthermore. So in this particular range, consolidation range. So once it consolidate further, then we might see fresh uh, right hand side breakout might see in this particular stock. But right now one can avoid this particular in this stock in at current juncture. Next one is Wari. So Vari Energy recently, I think after they have awarded multiple contracts. So that is the reason from last almost 1 week the stock is gained a lot from the lower level. So it's still making a IPO based formation. So those are already holding or those are already got an IPO of Wari. Then continue to hold this particular stock. Better to watch out for this recent high, which is made around 3,600 level. That will be the crucial resistance level as of now for Wari. But looking at the current juncture, better to avoid this fresh entry in this particular stock. So once again, if it comes back towards, if it makes a base around 2,950 kind of level, then it's a very good breakout in the right hand side. Then one can look for this particular stock. And next one is, I think NTPC, we have covered it. Okay, no. So NTPC clearly down, it's making lower high, lower low price structure. One can avoid this stock. So it's kind of negative sign is over everywhere. So 200 DM will be the key level for on the upside. Also, this horizontal trend line also, which is near to that level. So one can wait for fresh entry once it crosses and holds only about 200 DMA. Uh, Sorry, Oriana Power, we are not tracking, and NTPC Green. So NTPC Green, it's still making, it's not made any basis as of now. So on the IPO front, like those are already got IPO, initial IPO, or those are already those who bought around this level, then continue to hold this particular stock. But fresh entry at current juncture can be avoided. EWL and in each. So BHL clearly showing negative sign. Better to avoid this particular stock. Once it comes back towards this 200 DMA, then one can look for. Tata Consumer also one can avoid because the recent guidance from the Tata where uh, uh, the product overall FMCG space is in crisis where urban demand is subdued and rural demand is not so coming from the rural area. Demand is so that is the reason FMCG stocks are losing that momentum. So one can avoid this particular stock. So Adani Green, volatile stock, but this stock can be avoided for swing trading purpose. Those are all waiting for longer frame chart. Better to wait for this 2000 kind of level on the upside. Until then, its stock is likely to trend in the volatile manner in the coming days. AWL. So AWL looking strong, but no, it's once again coming came back towards his 200 DMA. So better to avoid this particular stock right now. So I think we have covered all the stocks. So those who are those who one can look for this particular episode in our MarketSmith India page under live section. You'll be getting the recorded uh, video under that section. So one can rewatch those who are willing to recorded session version of this particular session. And thank you for joining this session, everyone. And I will wind off the session. Thank you, everyone.